So welcome to this video. In this video, we are going to discuss about marginal costing. So marginal costing is a very important part of management accounting, and it's a quite interesting concept, and it's quite extensive, and it has like wide applications in management accounting here. So we'll discuss about this topic first theoretically, then we'll move on to how to work out these problems. Okay, so this is like one of the most important chapters in which you can apply even in your real life. Okay, so you can apply it in decision making, and you can make better decisions. You can decide upon a lot of decisions with marginal costing. Okay, so we'll start with what is the concept of marginal costing. See, marginal costing is the ascertainment of marginal cost and of the effect on profit of change in volume or type of output by differentiating between fixed costs and variable costs. Okay, so normally what we do is we try to find out the profit by having sales. From there we less the total cost, and we finally end up with the profit. This is how normal or a traditional accounting system will have. Okay, so even if you take a financial accounting system, this is how it computes the profit. So what it does is it assumes that all costs are as total cost. But what does management accounting and marginal cost does is it divides the cost. Okay, it divides this total cost into two sub elements. Okay, the two sub elements are called as we'll take it here. Okay, we'll put it here. So it's called as, one is variable cost and fixed cost. So essentially it divides the cost, or it bifurcates a cost into two parts. One is variable cost and fixed cost. So the sales minus the variable cost, so you could see here the sales minus the variable cost is called as contribution. Okay, and the contribution minus the fixed cost is called as profit. So if you essentially you take all these elements are nothing but total cost. Okay, these are nothing but total cost. So reduce your total cost, and that will be your profit. But we are bifurcating that cost into two parts, which is called as variable cost and fixed cost. Okay, so the difference between sales and variable cost is called as contribution. Okay, so what is contribution is, what is the profit that you get for the sale of one unit. Okay, we can't say exactly profit, but what is the cash inflow that you get for the sale of one product. Okay, you can think it like in that terms. Okay, that's a maximum definition we could come close to giving for contribution. Okay, hope you got the idea here. The idea in marginal costing is bifurcating or dividing the cost into two parts, which is called as variable and fixed cost. And as we have seen in the introduction to cost accounting itself, that variable cost is a cost which changes with activity. Okay, it changes with activity. And what is a fixed cost? So I think we can put it like this. And what is a fixed cost? A cost which changes with time. Okay, with time. So how we could put this? If you produce one single product, okay, it's 100 rupees. If you produce two products, it's 200 rupees. So the additional production is called as cost, is called as variable cost. Whether you produce or you don't produce, you have to pay the fixed cost. So that is called as a fixed cost. For example, rent. So rent or salary, you have to pay this cost irrespective of the production or sales. So that is a fixed cost here. So that's what the definition tells here. Where you could apply this concept, you could apply this concept in a wide variety of things to find out profitability of products. Okay, where you divide it into what is the contribution it gives and what's the profit it gives. Okay, so you can think in that terms. You can also think in terms of limiting factor. What's limiting factor? We'll see in this chapter. Make or buy decisions. Assume that you have like 2 3 products. Which product should be made and which product should be outsourced and bought? Okay. Diversification of production. Should we produce some other product also in our factory? Fixation of selling price. What price should be fixed and what would be the sales? Alternative methods of manufacturing. So assume that you have to buy 2 machines. Okay, you have to buy a machine for manufacturing. So will you buy machine 1 versus machine 2? Okay, machine 1 versus machine 2. So if you want to take that kind of a decision, then also marginal costing is useful. And operate or shut down. Should you continue the business, or should you shut it down, or should you shut it down for a temporary period? Okay, so you can put like this: shut down for temporary time or permanently. Okay, so should you shut it down temporarily or permanently? Okay, or we'll put it like temporarily. Okay, so even this decision, it helps. So which companies will try to shut down temporarily or permanently is something like hotels, okay, or something like theme parks will not have much customers during some winter season or something. So at that time they will try to go for partially closing down or permanently closing down the facility. Again they will open up in the summer or during the vacation time. So that kind of decisions also has to be taken, and marginal costing helps that. Maintaining a desired level of profitability. So when sales selling price changes, when variable cost changes, fixed cost changes, uh, how many units should you sell to maintain the same profits? Okay, so when selling price comma variable cost comma fixed cost changes, okay, then how many units to make to have same profit? Okay, so that's a kind of important question. Okay, so even when things are like changing, you want to have a same amount of profitability. Alternative courses of action, profit planning, and appraisal of performance. Okay, so it has a wide range of applications here, and also there are like certain assumptions which are made in marginal costing. So we'll just look at the assumptions made. In marginal costing system, only variable costs are considered into consideration for calculating unit cost. Okay, so variable cost number is a very important number. Fixed cost is not such an important number in marginal costing. So fixed costs are period costs and written off over the period. Okay, so usually fixed cost is not such an important number, and okay, I think third point we leave it. It's not that important. Okay, fourth point we leave, and fifth point. So marginal costing is useful for a short-term decision making purpose. You can't use it for a longer term decision making purpose, but for short-term decision making, it's like very powerful. And marginal costing will also help you to find out what is the behavior of the cost, whether it's a fixed cost, variable cost, semi-variable cost. And seventh point, I think we leave it. So the difference between the sale price and cost of sales is called as contribution. Okay, I think that we have already discussed. So let's see at the important terms which are used in marginal costing, because without these terms, it's quite impossible to understand marginal costing. So we'll start. So the first one is contribution. So contribution, as we have already seen, it's a difference between the sales and variable cost. It can be a whole amount of sales and whole amount of variable cost, which gives a whole amount of contribution, or it can be selling price per unit, variable cost per unit, which gives the answer to contribution per unit. So that idea you can get it from here. Okay, so here we have done it in per unit, This is in per unit also you can calculate, or you can also calculate in total amount. Okay, you can calculate in both ways, you will get the similar kind of an answer. Okay, so that's what this contribution is all about. Contribution is the difference between the sales and the marginal cost or variable cost. So we have like some more items. We have things called as PV ratio, break even point, and margin of safety. So rather than looking at them now, we will do a problem and we'll understand. There's also break even analysis. When we do a problem, we'll take this theory. So for as of now, what we'll simply do is we will copy all these items and we'll paste it in the problem. While we do a problem, we'll get the idea. Okay, we'll get the idea as to how to work it out. So we'll have the theory worked here. Okay, I think once we do the I think we can't copy it. Okay, we can't copy it. So once we are going to do that problem, okay, we'll revisit this page and then we'll work it out. So we'll start from the problem number 1. So problem number 1. So we'll start. So the question is, calculate contribution and profit from the following. Sales is 1000 units at 10 rupees, 10,000. Variable cost is 6 rupees, fixed cost is 8,000. Okay, so we can do it in two ways, the same problem. So we'll copy the format first. So first we'll get it from selling price. So selling price per unit is 10. Per unit is 10. Variable cost is 6. So contribution per unit is going to be 4, and we can find out the total contribution. Okay, how do we find out total contribution? Multiply 4 rupees per unit into 1000 units, you will get the contribution. Okay, see, from there on you can deduct these elements. Okay, you can deduct these elements. You can deduct fixed cost and profit. So why are we multiplying 4 into 1000 here? Because fixed cost will not be in per unit. You should not convert it into per unit. Okay, so fixed cost in this sum, it is 8000. So that leads to a loss of 4000. Okay, so it's not profit, it is actually loss in this sum. Okay, so we can also do this sum in full amount. So let's work it out. See, they have said that sales is 10,000. So if you want, we can take the number and do it. So 1 second. Sales is 10, so that gives you 10,000, and variable cost per unit is 6, so that's 6,000. So you can now deduct, and fixed cost is 8,000. So if you see, you have a loss. Okay, loss is 4,000. Okay, so the key numbers are this profit or loss, and the contribution are the key numbers here. So however you do it, you will end up with similar answer only. Okay, so as we do the sum, we'll get an idea about it. We'll move on to the next problem. Number 2. So here we have certain items to be computed. So we'll first copy the format. So format is very important. So this problem tells you the selling price per unit is 60. and variable cost is 30 per unit. Fixed cost is 10,000 per year in a year. Sales forecast per month. Okay, per month. I think we'll convert this as per year. Okay, we can't have it as per month. Okay, we can take it as per uh, year. I think that will give you the correct one. Okay, we'll just like rectify that. Okay, hope it's correct. It's per year we'll take. Okay, so all the numbers are in per year only. So let's work it out. The first one that he wants is contribution and profit that he wants. Then PV ratio or CS ratio. Then BEP in units, BEP in amount, MOs in units, MOs in amount. Then what will be the profit for 1 lakh uh, of sales, and what number of units that must be sold to earn a profit of 25,000. So these are the total questions here. So let's get the answer for this. So we can work out in both ways. Okay, we'll work out in both ways. So we'll work out actually in per unit itself. Okay, we'll work out in per unit. So selling price is 60, variable cost is 30, contribution per unit is 30. Contribution total should be 30 into 900 units. So that leads to 27,000. Okay, and fixed cost is 10,000. So thereby profit should be 17,000. Okay, so if required we'll use this format. If required. If not required we can just leave it. Okay, we don't need to work it out, but usually only when things are required we do, or else we can leave it. Okay, so we'll start with these. What are these items here? We'll start with what is a PV ratio. So this is about PV ratio here. See, PV ratio tells the relationship between the contribution and sales. Okay, so this is the ratio here. What does this ratio tell you is, it tells you how much profitability a product is. Okay, assume that you have like 5 products, it can easily compare between the 5 products and tell which product has the highest profitability. Okay, we can't say like profitability, but contribution wise which one has a higher value. Okay, so the higher is the better. The higher the PV ratio or CS ratio is the better. PV ratio refers to profit volume ratio. CS ratio refers to contribution sales ratio, but both are similar only. Both are like same ratio only. So let's apply it to our concept. So you can use either per unit wise you use, or you use total amount. You will get the same answer. You don't need to worry about that. So this is number 1. So let's find out the answer here. Answer would be 30. Contribution is 30. Fixed cost is sales is 60. So which leads us to 0.5. Okay, so that's about the first one. Let's get the second one. Second one is, okay, sorry, that is actually the second one. So getting the contribution was the first one. So the third point that we have to deal is BEP in units. What is BEP? We'll again go to our theory. See, BEP refers to break-even point. Okay, so this is a point at which you will make neither a profit or a loss. So you can find it out in two ways. One is BEP in units and uh, BEP in amount. You can find it out in two ways. BEP in units tells you in which unit you are going to break even. The BEP in amount will tell you in which sales amount you will break even. So essentially they are like similar only. Okay. So we'll take both of these formulas. As we have seen the idea what it is, we'll apply. So formula is very simple. Get the fixed cost. Fixed cost is 10,000 divided by contribution per unit. Contribution per unit is 30. So your answer should be this number. What is this number? This number is units. At this number of units, you will neither make a profit or loss. Okay. And he asked you, what is the BEP in amount? How can you find it out? Okay. See, this is the BEP in sales. Okay. Multiply the selling price. BEP in units into selling price will give you this answer. So we'll take this number. We'll take 333 into what's the sales amount? Sales amount is 60. So we'll find out. Okay, see, it's essentially like 20,000. It's essentially 20,000. Okay, this is the amount. At 20,000 of sales, we achieve break-even point, right? So that's about this concept here. So we have done fourth also. So now we have to move to the fifth one. So we'll look at what is MOS here. See, MOS refers to margin of safety. Margin of safety refers to what is the profitable part of sale. Okay, see, sale is divided into two parts. One is the sale that is made to recover the cost and the sale that is made which generates profit. So higher the MOS, higher your profit is going to be. Okay, the formula is MOS in units is profit divided by contribution per unit. MOS in amount is this formula. MOS in units into selling price per unit. We'll copy it. We'll paste it. Okay, done. This is our fifth formula. This is our sixth one. So let's get the answer. So answer is profit is 17,000 divided by contribution per unit, which is 30. So that will give us our answer. So if you see, this is the profitable sales. Okay, this is the profitable sales. If you want, you can also have a proof. Proof is total sales equals to BEP sales plus MOS sales. Okay, let's check whether it's correct. So what's the total sales? Total sales in the sum, it is 900 units. So 900 is of two parts. One is 333 BEP sales and the other one is 567. Okay, add both, you will get 900. So that's about the proof. Let's get this answer. So MOS in amount would be, get the MOS units 567 into the selling price. Selling price is 60. So if you multiply, you will get the answer. Okay. See, by this way also you can add and get the answer. What's the total sales? Total sales for this company would be 60 into 900. So how much does it come? 60 into 900. So that actually comes to 54,000. So you can tell 54,000 of sales amount is equal to 20,000 of BEP sales plus 34,000 of MOS sales. Okay, you can also work it out like that. Okay, so you don't need to show proof in your exam, but this is a technique, okay, to check whether your answer is correct or not. Okay, sometimes if you forget MOS formula, this is a shortcut. You know what is the total sales units and you know what is BEP sales units means. Direct both, you will get the MOS sales units. Okay, it's like shortcut. You can try that also. So we have put it for both. So this is for units and this is for amount. Okay, done about it. So we have two more parts. Okay, sum number 7. What is they require? They require what will be the profit for 1 lakh of sales. Okay, if sales is 1 lakh, what would be the profit? Okay, it's very simple. Take this entire format and you can quickly get the answer. Okay, so if selling price is 60, so for 1 lakh units it would be how much? Okay, it would be 60 into 1 lakh. Okay, is it 1 lakh of, okay, see, the sales is in amount, the sales is in amount. Okay, so 1 lakh is going to be the sales value, right? 1 lakh will be the sales value. So we'll do the longer way, then we'll do the shorter way. Okay, so how many units is this? How many units is this? This would be 1 lakh is the sales amount divided by 60 per unit. Okay, so that will roughly be like this, 1667 units. Okay, so multiply that number of units, with the variable cost, that's 50. Okay, and the difference between this is going to be 50,000, right? And I think that's not contribution, that's going to be contribution here. And what is the fixed cost? Fixed cost is same 10,000 because that will never change. So your profit will be 40,000. See, this is a longer way of doing it. Okay, I'll also do a short way. The short way is this. Okay, expected profit equals to expected sales into PV ratio minus fixed cost. It's a very small formula only. Okay, let's get the answer. Expected sales lakh, PV ratio 0.5, fixed cost 10,000. That's it. Get the answer. Okay, so you got the same 40,000. Okay, you got the same 40,000 without doing the format. Okay, how did we get it? See, there's a relationship between the sales and contribution is a PV ratio. Okay, so if you know what's your sales value, multiply by PV ratio, you'll get contribution. From there on, you direct your fixed cost, you'll get your profit. Okay, it's actually quite simple. See, it's all about doing more problems. Okay, so number of units that must be sold to earn a profit of 25,000. So we'll just type the question here. Number of units to be sold to earn 25,000. So let's get that here. So how do we work out this? So we have again a formula. Okay, expected sale expected sales equals to expected profit plus fixed cost divided by contribution per unit. Okay, we'll do it that way. So our expected profit is 25,000 and our fixed cost, which is always the same, which is 10,000. Contribution per unit, we have already found out it's 30. Let's get the answer. So you have to put some brackets or else it will not work. You got a number. This number, okay, this number represents units. Okay, so that's about it. So if you take 1167 and you multiply in this manner, okay, multiply and use this format and do it. So it's going to be like 60 into 1167. You will get 30 into 1167. You will get contribution, direct fixed cost, you get profit, and that profit will be 25,000. Okay, so you have to do these sums again and again, then only you'll get a grip of about these sums. Okay, and as a bonus, we'll just look at this. We found out that if BEP units is going to be 300, okay, BEP units is going to be 300 units, 333 units, our profit will be 0. Will it be correctly like that? Let's check. Let's check that also, so that you get an idea. Okay, so we'll start. So if you sell 333 units, what will be your sales? 333, one second, 333 units into selling price per unit. This will be your sales, this will be your variable cost, and this difference will be your contribution. Okay, so why are we not getting that exact answer is because there are so many decimals. Hope we got it right. Okay, I think we got it right here also. So it's 10,000. We'll just put 10,000. Okay, this would be our profit. What is our fixed cost? Our fixed cost was 10,000. So contribution is 10,000, fixed cost is 10,000, answer is 0. So hope you guys got the idea here. Okay, hope you guys got the idea here. So at BEP, okay, units, your profit will become 0. Okay, loss will be 0. So that's about this problem. We'll do another problem. Okay, another very similar problem next. So we'll take a break and then we'll do it.